Welcome to Talk Tickers, where we break down the earnings calls that are really moving the markets. Today, we are diving deep into Core Natural Resources, that's ticker CNR. Now, on the surface, their Q3 report looked a little messy. But the market's reaction? That was a whole different story. So what in the world did Wall Street see that sent this stock soaring? Let's get into it.
Okay, so first things first, just look at that reaction. The day they dropped their earnings, the stock rocketed up a massive 11.45%. In a market that just punishes any tiny little misstep, a double-digit pop on what looked like a mixed report, that's pretty rare. It tells you there is a much, much deeper story going on here than what the headlines were showing. And this slide right here perfectly captures what I'm talking about, the headline paradox. On one side, you have this massive earnings beat. GAAP EPS of 61 cents absolutely crushed the consensus estimate, which was for a loss of $1.40. But then on the other side, revenue came in just over $1 billion, missing expectations by almost 4%. So how do you square that circle? Why did investors totally ignore the revenue miss and focus on something else entirely?
Well, the answer is that the market looked right through all that short-term noise. Instead, it zeroed in on the underlying strength of the business and, get this, two massive catalysts that are looming in 2026. This wasn't a trade on how they did in the last 90 days. Nope, this was a big bet on the next 2 years. Now, what's really interesting here are the numbers behind the headlines. Adjusted EBITDA came in super strong at over $141 million. They generated nearly $39 million in free cash flow, and they're sitting on almost $1 billion in liquidity. And crucially, they put that cash to work, buying back over $19 million worth of their own stock. This shows a business that is financially healthy for sure, but also really shareholder-focused. So the big question is how they pull this off, especially with our high-margin Leer South mine just sitting idle for the whole quarter. Let's take a look inside the operations and see how this all comes together. And this just brilliantly illustrates the resilience of their core business. Even without Leer South, just look at these margins. Their Powder River Basin, or PRB segment, was profitable. The high CV thermal segment was very profitable with almost a $20 per ton margin. And even the remaining metallurgical operations managed to eke out a small profit. It's this operational stability that provided the cash flow foundation that really got the market excited. And CEO Jimmy Brock really drove this point home on the call. This quote, it underscores a key theme: disciplined execution. They're actively managing their costs and just grinding out positive cash margins, even in a pretty tough commodity environment. You see, this isn't a company just sitting around hoping for higher prices. It's a company executing on what it can actually control. Okay, let's talk about that big operational drag, the Leer South mine. The reason it was idle, well, it wasn't some catastrophic failure. It was a regulatory bottleneck. The restart plan is all ready to go, but they've been stuck in a holding pattern waiting on government personnel from MSHA. That's the Mine Safety and Health Administration. The market looked at this and didn't see a permanent problem. It saw a coiled spring, a major earnings catalyst just waiting for a green light. So, with the operation stabilized, management spent the rest of the call pivoting everyone's attention to the future. And this, right here, is where the story gets really compelling. They focused on a super clear capital return plan and a brand new, potentially game-changing catalyst. First up, the capital return framework. Management was crystal clear on this. They're targeting returning about 75% of all free cash flow directly to shareholders, mostly through buybacks. Now, for investors, this provides a really powerful and tangible reason to own the stock. The message is simple. As the business generates cash, we get paid. And then they dropped the bombshell. Just when you think you've got the company all figured out, management posed a question that could fundamentally reframe the entire investment case for Core Natural Resources. They announced that recent sampling has confirmed elevated concentrations of rare earth elements, or REEs, at their flagship mines. Now, this isn't just some little side project. This is a potentially massive source of resource optionality. They're already moving past the exploration phase and are engaging experts to figure out how to cost-effectively extract them. If this works, it could transform CNR from a pure-play coal producer into a diversified minerals company that's supplying critical materials for the tech and defense industries. Huge. So let's put all these pieces together. You've got a resilient core business, a major operational catalyst with the Leer South restart, a clear shareholder return policy, and this incredible high-impact call option on rare earth elements. All of that brings us to our rating. But first, let's put this into context, because this slide really illustrates the opportunity here. Over the past year, while the S&P 500 is up 16% and the metals and mining index is up a whopping 38%, CNR is down 30%. This massive underperformance, combined with all the positive catalysts we just talked about, sets the stage for a potential major catch-up trade as the market starts to price in this 2026 story.
And for that reason, our rating on core natural resources is outperform. The market's powerful reaction to this call signals that the smart money is looking way past the temporary headwinds. The whole investment thesis is now centered on two key catalysts for 2026: the high-margin restart of that Leer South mine and the enormous and currently totally unpriced potential of their rare earth elements program. All right, now for our final segment, we're going to map out an outrageous but plausible trade idea based on this thesis. Think of this as an analyst pitching an idea to their investment committee. So the whole trade is built on this REE optionality. The thesis is pretty simple. The stock's current price reflects only its coal business, assigning basically zero value to the rare earths. The catalyst that will unlock this value would be something like a formal announcement of a technology partnership, or maybe a press release detailing successful extraction results. The way to play this catalyst is through long-dated call options. This gives you leveraged exposure to the upside if and when the market begins to re-rate CNR not as a coal company, but as a strategic minerals producer. And a final and very crucial reminder, this is not financial advice. This explainer is for informational and educational purposes only. Always, always conduct your own thorough research and consult with a financial professional before making any investment decisions.